Hello, my name's Craig Earlham, Senior Market Analyst at Oanda. Today we're going to talk about gold. Now, gold has been on a downtrend now for a number of weeks, so the recent weakness which we've seen isn't necessarily coming as a major surprise. What has potentially come as a little bit of a surprise has been the lack of downward momentum which we've seen recently. The reason for this is because 1280 was seen as a major level of support. If we look back over the past number of months, $1280 has been a major support level. So the fact that we approached this level again, we did find it support initially, but when we eventually broke below, from a purely technical perspective, that could be seen as a potential catalyst for some more downside moves. We came back towards the kind of $1270 where we ran into initial support, and we did get that crucial confirmation that came from price rebounding towards 1280 and rotating off that level again. So I think it would have been natural for us to expect potential momentum to pick up from here to the downside. But we've come below that 1270. We have made a new low, but again, we are seeing a little bit of buying pressure. Now, for me, that doesn't necessarily mean that we're not going to see further downside. I still think momentum is still very much with the bears right now. It does just suggest that we are seeing some resilience from below. That doesn't, again, necessarily mean we won't see further moves below. And I think 1260 is going to be very key here. 1260, again, is a historic level of support and resistance and could therefore be key again. And this is also where we see the introduction of the 200-day moving average, a closely followed technical indicator, which also could potentially provide some support here and at least give some potential directional indication around that level. So this is the level to the downside which I will be closely watching. Another factor to closely watch here with regards to gold is often the case is the US dollar, because gold is of course priced in US dollars, so a stronger dollar tends to be a bearish indicator for gold and a weaker dollar and a bullish indicator for gold. And one of the reasons why we have seen gold moving towards the downside is because the dollar has been very well supported. But another indicator we can look at here is the size of the moves we get in either direction when the dollar moves. So, for example, when gold was peaking, in times of weakness in the US dollar, gold was rallying quite strongly, and in times of dollar strength, gold wasn't necessarily pulling off in the same way. The reverse has very much been true during the downside, so that has given extra credence to the bearish moves which we've seen. That relationship has become a little bit grey over the last week or two, so that could again potentially be a sign that momentum is just not really with this downside move just yet, which again makes that $1260 all the more interesting. The flip side of that, of course, though, is that we are seeing a lot of dollar support right now. If we look at this week, for example, we've seen some good earnings reports from the US, which has provided further support for the US dollar, especially at a time when other currencies just are not performing well. For that, we look at the euro, which we've seen some bad economic data, which has weighed on the single currency. We look at the UK, where the Brexit situation remains unresolved, and we've seen some pressure there as well. This is providing near-term support for the US dollar, which again could continue to pressure gold. So from my perspective, nothing much has changed over the last couple of weeks. The break of 1280 is significant. 1260 remains key, and these are the levels to the upside and the downside, which I'll be keeping a close eye on. If we do see a break above 1280, then again 1300 becomes very interesting, and a break below 1260, of course, I think is a more significant breakout again. But for now, we could potentially continue to see this rotation because there is clearly still a lot of back and forth between the bulls and the bears around these levels, despite the fact that we have seen a technical key break of that 1280 level.